Okay, I'm just going to do a quick run through the markets. We'll have a look at some levels, and I'll just say I might sound a little bit ill today. That's because I am. So bear that in mind. First things first, transports. So yeah, we've got a big picture reversal at active low, high, low, high, high. We can see that obviously. For those of us who like Dow theory, me being one, transport's being the leader. Let's go to the leader of the European markets, the DAX. Same. We've taken out some important levels on the DAX. For the DAX, if I was just going to say, this is the market we follow, clearly it's a buy the dip market, isn't it? But one market does not make a trend is something else I'm going to roll out. And I'll just roll out the last thing. When the DAX and the transports move together, I take notice. Now, we're seeing the DAX, we've been seeing the DAX and the transports lead this move. So we take notice. I'll just quickly go through the psychology of the markets. I get a lot of messages on this. Edward Treetop on Twitter as, he's in heavy on the lows. Basically, I'll just zoom this out. I'm going to stay in my lane. To be able to buy in to the market again on the lows, you're making an educated guess at best, aren't you? And we'll just remember that everyone who bought the lows here, the market bounced. I should show it on a different market, really. They bought. There was I remember a big call here going out, and paper cuts got burnt. Big call here going out again, got burnt. Big cut. So Edward Treetop's been had his legs chopped off 4 times before he's basically nailed the bottom. So I'm not going to go out there on Twitter crowing about things about being right or wrong. I'm just gonna note that swings came online. Here it was a dead cat bounce or bear rally, whatever you want to call it, and here we started seeing the structure in the markets and in the screens, and this is where swings and stocks started to actually trade like stocks on the long side again. So we don't see this by making a guess. We see it by turning up every day and just running the screens and seeing those breakouts and first retracers. And this is where swings for me started to work. But for my portfolio of small cap, what most people are interested in is riding small cap trends. I say most, a lot of people who follow me like the small cap trends. I put 66%, 2/3 of my portfolio is allocated to small cap trends, and if everything's working fine, I will go 100% into them. But they tend to come on board a little bit later, but they will be leaving the station around this area, and we're seeing a few. We're seeing a lot of structure in the markets, and we've seen a few. I'm not going to make that Hail Mary call that the bottom is in here. I'm just going to trade that right hand edge, and if things progress in my portfolio, I will add more heat to that area. I run my risk model so I don't overheat my account based on how bullish the market is. We've had a punch higher in the trend models today, Friday. I'll just bring that over again. Let me just bring my chat group over and sort this out. I did post it on the social media, didn't I? So this was the bear rally, and we noted, for us, I've got history of this back to 2011, and not quite enough pain there. It came over a bit lower. We saw a little bit of a divergence there, as we like to see. And off we go. Strong move higher. Now, I'll tell you where trends started working out fantastically well. Let's try and find it on here. Around here, you know, the trends started working out pretty fine. You know, we've had a good bounce out of here, but we've still not seen all those trends. So, you know, we'll just keep turning up at the right hand edge and see how they progress. Let's go through these other markets. So, in May, I did a share scope tutorial. I know I'm beat like a broken record. We look for the strongest market to land. The last market is the strongest market to land in the big picture area, and this is the area we drew on the S&P. And look at this day here. You know, if you think Wall Street wasn't watching, you know, this level, obviously it was. You know, the old gap down and close up on volume, and that's been the short-term low. And we've got, it's good to see price action rather than just a straight up and straight down, because, you know, once the market starts trading as, you know, once the market stops going down, time or price, and just spending time above this low is a really bullish thing. But look at the voodoo average. You're going to see a few double tops in this market as well. I'll just note that as well. So let's go to the NASDAQ. Active low, high, high. The first one we've had. You know, still a meaningful level up here. Russell, active low, high. Into the voodoo average. Double top on this little level here. You know, make of it what you will. DAX and transport's obviously look the same. Look at this on the FTSE 100. This is your all-time highs on the FTSE 100. See a double top, you sell a double top. So, short-term trading rules that. So yeah, this was strikingly obvious level for some short-term sort of back and fill, isn't it? Even if it is going higher. Let's just quickly have a look at the 250. Nice to see it sort of approaching these levels. These levels here on the 250, you know, same. You know, we're into some levels here. Obvious area for it to just see some back and fill. But we do have the price action reversal again. So we've got a punch higher in the trend models, the highest we've seen in over a year. That's what we want to see. I'd like to say buy the dip is on the table. But let's just note that the 200-day or the 10-month is still falling on most of these markets. Markets what count as well. And, you know, trading above the mark, above a falling 10-month or 200-day, trading above is a very bearish area in a downtrend. So what we want to see is this thing hang above this 10-month as the opposite of trading below a rising 10-month. Trading below a rising 10-month. You know, it's going to have a good edge to the upside. The opposite is, you know, even if it's just a short-term pullback like this one was, but just trading above that level is good. On the FTSE 100 and the 250. So, sorry, small caps is the last one we need to go at. So it's constructive, isn't it? It's constructive. The trend is still longer term down, though the short term is turning up. Price action is pretty good at the moment because we're in a pretty bullish period. 10 minutes into this video. Yeah, I mean, the right-hand edge is unwritten. It's not about making Hail Mary calls. It's about easing the risk on. You know, we hope that the markets can spend time above these levels, and that is a low, but we do not know that. So, you know, I'll just say from my point of view, you know, I don't chop and change. You know, I stick things in a lane, swing trader or a trend trader, and I stick within my heat limits. And that's what's helped me navigate these markets for well over a decade. Oh, well over a decade now, on a day-to-day basis. You know, by not making Hail Mary calls, there's no need to gamble in the markets. So we will see where we go from there. But I just thought I'd just run through these levels. You know, expect some back and fill would probably be my main point today, and don't get the FOMO. Okay.